welcome to BW Business World in another episode of Founders Lounge. Today, my guest is Mr. Ananth Narayanan, who is founder of Mensa Brands. Welcome, Mr. Narayanan.
Thank you. Thanks for having me.
So good to have you. Just to start with this conversation, tell us how was the last 1 year in terms of your personal and professional life? Also, what are some of the prominent trends you have seen in the last 1 year for the better?
Firstly, thanks for having me. Good question. So, Mensa is about 21 months old. So, the last year is a large part of the life of Mensa. We've had a good year. We have 20 plus brands now. We are a 200 million run rate business. We are overall EBITDA profitable. And of the 20 brands plus brands that we have, 7 brands are starting to really break out and become category leaders, right? And this is across 3 spaces that we're in, which is fashion, beauty and FMCG, and home, right? So it's been a very good year on terms of Mensa itself and financial and brand performance. What's also very heartening is our team has really grown. We now have offices in Mumbai, in Gurgaon, in Bangalore, as well as in the Middle East. We've grown to 600 plus people. And we have an outstanding team. We have a fantastic founding team as well, which has been from the very beginning, who are also very passionate about brand building. So I think the team has also come very well together. And third is, look, from a technology standpoint, I'm a big believer that tech leads to a lot of disruption in every space, including in consumer and brand building. And I think that's sort of proven out for us, where we continue to build a great tech stack, a great operation stack, and a great brand stack that goes across all of our brands, right? So that's been the year. I mean, obviously on the personal front as well, it's been good, but I've spent most of my time on Mensa. So Mensa, I think personal and professional completely merged together. But it's been wonderful. And I think creating something from scratch with a great group of people is always very energizing. And I think that's what keeps one going, right? So that's the overall piece. I think if I look at the trends outside of Mensa in the last year, if you just look at the startup space in India, I do think many things have changed for the positive. In my mind, by the way, I think the quote unquote funding winter, etc., is actually a good thing. What happens is, I think you end up tightening the belt. You end up focusing on unit economics. You end up building profitable and sustainable companies, which I think never go out of fashion. And I think eventually cash flows matter and profitability matters. Of course, by the way, you need to take a longer horizon and you need to invest and all that. But we have always believed consistently from day one that we want to create a profitable business, right? And I think that's really proven out. And, we've sort of done it fairly quickly and at scale. And I think we're very proud of that. And I think that's because your operating discipline is good and you believe that you can make money and grow, and they're not at odds with each other, right? You can both make money and scale the business, and both can happen at the same time if you do it correctly. So that's it. That's in short been the year. It's been a very good year.
Well, and adding to it, you just as a brand raised a debt round of, if I'm not wrong, it was $37 million.
That's right. 300 crores.
Somewhere around.
Yeah. Yeah.
How was it? How was it? And what are your plans with this?
Yeah. So, I mean, look, one is it's very liberating to be EBITDA profitable, right? So, once you make money and start making money consistently month on month, quarter on quarter, year on year, then I think instead of diluting a lot of equity, you could actually get debt that services your working capital needs, that helps with growth, etc. Which is why we've sort of taken on debt, because you need to continue to invest in inventory. You need to continue to invest in things. So it helps with cash flow, but it doesn't dilute you. And that's why we've sort of raised debt, because we continue to be a profitable company. Our business is quite interesting. Our brands are actually standalone profitable, and our corporate EBITDA is also positive, like I was telling you. So the capital that we raise, mostly equity, but debt as well, is really, I think, or at least on the equity side, used to buy great assets, right? We're looking for, the way I think about it is, we're looking for buildings which are half finished with good foundations that Mensa can then buy and build into monuments, right? I think that's a bit of what the model is, right? So we buy brands that are early stage, that have shown product market fit, that have great consumer experience, but may not be growing very fast, may not be at scale. And our ability to sort of take that and apply the tech stack, the ops stack, and the e-commerce expertise to grow them is really what the model is about.
Interesting to know. It's equally very, when you say that, it's very energizing and very, very enriching to guide the brands and to help them, to support them, to back them. But it is equally risky, if I can say so, just because it's very
Yes.
difficult to figure out how strong the model is, how strong the business idea is, how better is going to evolve. So it's very on the edge kind of thing to figure out how well it's going to do.
Yeah.
If you can talk more on this, Ananth, what is your
The
strategy?
criteria.
What is your
Yeah, yeah.
approach of evaluating, of selecting the brands, which sector, which stage, how well it can grow? What are the
Yeah,
areas you need to guide them on? What is your strategy
sure,
on this?
sure. So, firstly, just to make sure that the anchoring is correct, we operate the brands, we run the brands, right? We don't just invest in them. So, the way you should think about it is a digital Unilever or a digital Inditex, right? So, we
Mm-hmm.
actually have a bunch of brands in the portfolio that we run, right? So, it's not just investing and giving advice, it's actually operating the brands day in and day out and scaling them, right? So, that's what we do, and that's the magic, right? It's execution heavy, but it's
Mm-hmm.
the magic behind what we do. Now, going to your second question of what is the criteria we use, right, to actually select brands and spaces. So I'll start with the spaces, then I'll talk about the brands. In the spaces, my belief is very simple. You pick a large market and you pick a high gross margin. Large addressable market and high gross margin, right? So, and the third criteria is ability to build brands, right, in that space. So the reason we picked fashion, the reason we picked beauty and FMCG, and the reason we picked home is across these three segments. It's 100 billion plus market. It's right. So it's very large. So you can build large brands, you can build a large business. Second is the gross margins, which is the amount of money you make when you sell a product, right? It's product price minus the cost of goods sold, is usually 60 to 80%. Which
Mm.
means, by the way, even after all your marketing costs, your commissions to various platforms, your other tech investments, you can still make money, right? If you don't start with high gross margins, you can't make money, right?
Of course.
So I think the two criteria we use is large size and high gross margin, and that's why we picked fashion, beauty, FMCG, and home. Now, within each space, while we have many different criteria for selecting it, I'll simplify and say there are three things we look for. The
Mm-hmm.
first is customer love, right? It seems very simple, but there are many ways to measure it. Repeat rates, cohorts, reviews and ratings, right? LTV to CAC, they're all indicators of customer love. But we look deeply at whether the products are really liked by the customer. We actually, by the way, all of us act as customers and buy products, and we see whether we like them, right? Which actually matters, whether the consumer experience matters. So that's probably a very large factor. The second
Mm-hmm.
that we look for is there something unique that has been built in this business? And what do I mean by that? You can either source very effectively, you can figure out how to grow in an Amazon or a Myntra very well. So, what is it
Mm-hmm.
that the team has done, right? The existing team has done that is unique, that has some moat in terms of what's been built. And then the third question we ask ourselves is, since we are not investors, we are operators, right? So the third question we ask ourselves is there a 10x for this brand to do? Can we, as Mensa, after we acquire the brand and partner with the founder and work alongside, can we grow the brand 10x through what I call the Mensa Alpha, which is the new skills we bring in? Can we grow it 10x? These are the clear three criteria we use for every brand acquisition and partnership that we do. We continue to look for great brands. We are continuing to invest, even in this environment, and that's actually been quite exciting. I must have met, call it 650 plus entrepreneurs in the last 21 months, right? So even that alone is great learning, right? And we've obviously partnered with 20 or 22.
So amazing. This is something which is common between you and me. I also love meeting people, listening to stories, collecting experiences, and this is
Yeah,
something
I
I
mean it's a
enjoy very
great way
much.
to learn also, right?
So three pointer criteria is customers love towards the product's uniqueness, the
Yes,
uniqueness of the product, and of course the growth potential. If you can grow it to 10x
that's
with
right.
Mensa. Which
That's right.
sectors do you look forward to? I mean, which areas? Of course, from other than the primary categories you already have, do you look beyond it? Or do you have any plans to go forward to
Yeah, no,
other
I
sectors
think
as well?
I think these three spaces are already very large, right? So, and I think it's still very unbranded. So, for example, in fashion, I mean, there are still very many open spaces, even though we have ethnic brands, we have men's casual, we have
Mm-hmm,
kids,
mm-hmm.
we have costume jewelry, but we don't have Western wear. We don't have loungewear. We don't have athleisure. So there's lots of open spaces even in fashion. Same is true in beauty. Same is true in home. So I think in these spaces already there are spaces. Um, However, in addition to this, I think nutraceuticals is a space is quite interesting because I do think over time nutraceuticals will start to get larger because people will get more health conscious, right? And I think
Of course, of
that
course.
seems like another interesting vertical, if you will, to actually look at it.
Good to know. In this whole process of selecting, anchoring, supporting, and alongside operating the brand,
Yeah,
I'm sure it comes with its own set of challenges. What are some of the common challenges you witness when you work with these brands? What are some of the common challenges? It can be the clash of opinions. It can be the operation problems. What are some of the common ones?
yeah. Firstly, by the way, as I keep repeating, but we operate the brands. We don't just advise them. So I think
I
we
know.
run the brand. And I would say, I think two, three things. The first is continuing to manage LTV to CAC, right, which is lifetime value of the consumer to the cost of customer acquisition is important. So how do you growth hacks that you don't pay a lot of money to acquire customers? I think is one
Mm,
area which is a real challenge. One of the reasons we bought mensxp.com, idiva.com, and Hype from the Times Group is that they provide a content and community platform that can over time help reduce cost of brand building and cost of customer acquisition, right? So I think that's actually been a good thing. And that's a challenge, but it's something that I think we keep working on. The second is, look, I mean, we are building brands, and brands are all about product development and launches. So we have to continue to innovate on product development to make sure that product launches happen. They happen at cost, they happen on time, and they continue to we keep giving fresh choices to consumers to buy our brands, right? Um, just to simplify it, I think that's the second thing. Third is, look, there's no magic bullet. This is a hard
of course.
role, right? It's an execution game. It's day in and day out. Like I keep telling our team, every day matters. You have 30 days. Every day is 3% of the month, right? So making sure that you're in every day and creating the best possible thing that you can for each of the brands is important. So it's just execution heavy, and therefore having the right expert team really helps. And there, I think we've done actually well. There's no challenge.
And of course, this is one area most of the brands struggle to bring down their customer acquisition cost, and this is something I mean,
Yes,
the major brands also are struggling with. Coming to my most interesting question, I was very keen to have your inputs on this. Mensa became a unicorn in a very short span of time.
sure.
Unicorn, I mean, in earlier times of 2020, let's say 2021, unicorn as a tag was very, I mean, it was a buzzword in those times. But today, when we look at it is kind of not that fancy. But
Right.
now, as you rightly said, the market correction, or let's say the funding dryness, are pushing or forcing brands to correct their unit economics, or let's say making them more profitable and focusing on the basics and
Yeah.
fundamentals. What can be the five-pointer agenda for any brand across these sectors to become a unicorn, especially in these volatile times? It's a difficult question, I know, but to be precise, five pointers.
Sure. So, firstly, by the way, before I get to the five pointers, I think, by the way, this unicorn tag is quite honestly meaningless. I think you have to create value and then valuation follows. I think you have to create
Of
value
course.
for your consumers, you have to create value for your investors, and then essentially, by the way, valuation is an outcome. It's not something you should chase. This is now my third stint after, fourth stint. If you think McKinsey, then Mintra, then MedLife, and now here. So, it's fine. It's great. It's good. But it's not the thing you optimize for. I think that's number one. So I wish journalists and others would come up with a new term for a unicorn, maybe a revenue corn, which is $1 billion in revenue and profitable. I think that would be something interesting to do. Now, but coming back to saying, how do you build a successful business for which one indicator is you have a good valuation that people externally value you, right? The 5 things that you asked for, I typically think in threes, but for you, I'll do 5 things. The first is, I think, pick a large market, right?
Mm-hmm.
Because it's very hard to sort of do this in a niche market. So it's picking a large market and an addressable market is important. Second, it is never too early to fix unit economics. You should not wait to fix unit economics. You should fix it in the first. Your product market fit is that your unit economics work, right? You can't say in 3 years I'll figure out my unit economics after I figured out how to get to scale, because you're bought that scale. It's not real organic thing, right? I think that's the second. Third is solve a difficult problem. And the reason to solve a difficult problem in many ways is, I think it is important to solve the problem which others can't so easily solve, right? So it's an execution game, right? So can you solve a very difficult problem through either tech or execution chops or whatever else, which I think is important. The fourth, and this is all in no order of importance, but fourth in my mind is surround yourself with people who are brighter than you, especially with talent, right? And then the fifth is look for more than money in investors. I think anybody, not anybody, but it's easy to get capital. It's harder to get great advice. And if you look at our investors, for example, if you take Axel, if you take Alpha Wave, if you take Norwest, all of them, apart from providing capital, have been incredibly helpful sounding boards in making the business successful. So think about investors who help you along the journey with more than just capital. I think these are the 5 things to build a successful business. Whether you become a unicorn or not, in my mind, is almost immaterial. If you can build a profitable, large, at scale business, valuation will follow.
This was so insightful, and I got my answer, and I mean, you have met my hopes and expectations. I was expecting it to be this precise, and this was amazing to listen from you. Towards my 2 final questions. One is, what is your larger vision with Mensa? I know Mensa means constellation, and you are right now working with over 20 brands. But
Yes,
what is the larger vision going forward in, let's say, for next 5 years?
very simple. We want to be the largest digital house of brands. We are already the largest digital house of brands in India. For me, one simple criteria is, can we create 10 brands that become household names? 10 brands that are each 1,000 crores in revenue and profitable and become household names. If we do that, all the rest will follow, right? And quite honestly, even today, right, I'm wearing Dennis Lingo, and Dennis Lingo is one of our men's casual wear brand. It's really scaled, north of 150 crores. I think it can be 1,000 crore brand. We have a brand called Villain, which is in perfumes and personal care, which again, I think can be a very large men's sort of brand, right? We have Trust Basket, which is a number one gardening brand in India. And that I think can become a large brand. We have a peanut butter brand called My Fitness, which again, I think can scale. So I think 5 years from now, if there are 10 names that become household names that are north of $100 million each, I think that would be success for us at Mensa.
We wish you all the very best for that too.
Thank you.
Towards my final question, and that is more about Ananth as a person, as an entrepreneur. Uh, I mean, what is, as an entrepreneur, I know you wear many hats, and you got to do many jobs at one time. But
Yeah,
what is that one part of your job you love doing the most?
I think getting the right set of people into the org and making sure that there's a great culture. I think that is what I
Mm-hmm.
enjoy the most, because I think if you get the right team, you can solve almost any problem. And I think we're very fortunate at Mensa to have a fabulous team. I think that's a large part of the reason why it's been good so far. Early days, but it's been good.
I know. What is that one thing or any person which keeps you going all the time?
I think learning, continuing to learn something new every day. I think gets me a lot of energy. I think that, and meeting interesting people, which I think you like doing as well.
Good to know. Any book in these times you would like to recommend?
I think the hard thing about hard things is a good book to read now, in particular. I think it's, and then 0 to 1 by Peter Thiel is another one that's always good to read. I think these are both books that I've read many years ago, but both continue to be very relevant today.
One liner advice for all the young entrepreneurs.
Best time to build in India is now. Go for it.
Interesting. It was a lovely conversation, and thank you so much for joining in.